In the 21st century, China has become one of the world's most prosperous economies. By 2016, it may even generate the highest gross domestic product in the world, surpassing the United States. In just a decade, it has become a key trading partner for Latin America and the Caribbean. Trade between the two regions was 22 times greater in 2012 than in 2000. Relations with China can boost Latin American and Caribbean growth, as well as reduce exposure to less buoyant industrialized markets. However, there is a trade deficit for most of the region's countries, and Chinese manufacturers are pushing out Latin American products in their own markets and beyond. In addition, the trade is inter-industrial, which means that exports to China are dominated by raw materials and very few products, whereas imports are much more diversified and are dominated by manufacturers, particularly high-end technology products. In recent years, various ECLAC reports have analyzed trade between both zones, and the Commission has been the contact chosen by the main Chinese authorities to present proposals on dialogue and cooperation with Latin America and the Caribbean in matters relating to economic development. ECLAC considers that, in order to make better use of the link with China, the region needs to transform and diversify its export pattern to reduce dependency on raw materials. It is also advisable to boost regional investment in China, integrate Asian supply chains, and attract higher levels of Chinese investment to Latin America and the Caribbean in manufacturing, services, infrastructure, transport, and logistics. China is now a good trade ally for most of the region's countries, but it is vital to move forward with the relationship. The Economic Commission for Latin America and the Caribbean recommends defining a regional agenda of priorities to strengthen Latin America and the Caribbean as a whole, and help it to become a genuine strategic partner for the world's fastest growing economy.